Hi, and welcome to Market Conversations. Today I want to talk about Tellurian. Ticker symbol is TLL. So this was mentioned by Sain. If you don't know who he is one of the most popular YouTuber talking about stocks right now. But I want to go in depth and let you know what Tellurian actually does. But before I do that, I just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Also, if you don't mind hitting that like button, subscribe button, and also leaving me a comment, it would help me out greatly. Also, I'm trying to reach 1,000 subscribers, and I think I can get there with your guys' support. And thank you all for who already subscribed. So let's get started. Tellurian was up 22% on Friday. And we take a look at the weekly charts. It's up 43%, the 1 month 145%, 3 months over 200%, and 1 year it is down 55%. If we take a look at the volume on Friday, it had almost doubled to 41.30 million versus the average of 27.02. So we have 8 analyst ratings. 12.5% says buy, 62.5% says hold, and 25% says sell. There is supposed to be an earnings report on February 22nd. So we're just going to take a look and see what they actually do. So they engage in producing natural gas and investing in natural gas projects. It develops a portfolio of natural gas production, LNG marketing, and infrastructure assets that includes an LNG terminal facility and associated pipeline in Southwest Louisiana. So on Friday, it was up because they got upgraded to outperform from Wolf Research, and they set a price target of $5. And one of the reasons for the bullishness on Tellurian is likely due to economic reopening optimism. Also, Tellurian co-founder and executive chairman Sharif Zuki said the company is looking to start construction on its $16.8 billion Driftwood liquefied natural gas export project by this summer. Else to consider is the goal of lower to no emission fuels. If we take a look at the third quarter reports, so during third quarter of 2020, Tellurian raised $32.8 million in net proceeds through issuances of common stock, reduced debt by $33.9 million, and extended the term loan maturity to March 2022. Natural gas sales rose to $7.3 million for third quarter, which was an increase over $6.3 million in sales for last quarter. I'm thinking that fourth quarter it will go much higher. The CEO said natural gas markets and prices have recovered worldwide. Investments and new drilling and infrastructure is acutely needed to balance the market in 2021 and beyond. Building liquefaction terminals as fully integrated partnership is the only way partners will secure the lowest cost of gas and be protected from the market's inherent volatility. The long-term outlook for liquefied natural gas could be much brighter than that of other fossil fuels. It has lower costs and lower emissions from a production and combustion standpoint. If you're thinking about getting in, go ahead and just start a small position. There's also options that you can trade. And normally what I like to do is sell cash secure puts or leap calls. If you're thinking that this is going to be a bullish play, you can always buy a leap call. And leap calls right now, they're actually quite cheap. And I looked for a leap call that has a delta of 0.8 or above because it closely replicates the actual stock. So let's take a look at a 1.5 strike price. Okay, this one has 0.8991, and this contract will cost $235. So instead of buying 100 shares at the current price, which is $339, so instead of spending $339, you would spend almost $100 less, but it would almost closely replicate the actual stock itself if Tellurian goes up by $1 or goes down by $1, this option contract will go up and down by 89 cents. So it kind of closely replicates the actual stock, and also you're saving some money buying a leap call. And with buying a leap call, you can also sell cover calls, collect an extra income. If that doesn't work, you can sell a cash secure put, let's say a February cash secure put. So instead of paying the premium, you get the premium up front. So let's say you're looking for a 250 strike price. Okay, you just need to put up the collateral. So you would get $20, and all you have to put up is $250. If you go further out, March, the premium will increase. So $250, now you're looking at $45. And all you have to put up the collateral is $250. And that $45 is yours to keep no matter what. You can buy shares with that. You can treat yourself to a nice dinner. Anything your heart desires. That money is yours to keep. The only downside is if the stock price goes below 250 or closes at 250 on March 19th, you would have to buy 100 shares of Tellurian at $2.50, which is good because you're also getting a discount and you collected $48. So selling cash secure put is another option strategy. If that doesn't work, there's always call options. If we look at a call option for February, you got a $3.50 call at the money. This one will cost you $60. If you go in the money, this one will cost you $80. But see, with call options, now you want the price to go up, or you can buy a put if you're shorting this. But with call options and puts, it's hard to predict which direction the price will go. So that's why I like to sell cash secure puts. Let me know your thoughts on Tellurian. What do you think of this company? And please don't forget to like and subscribe if you found any value in this. I'm going to go ahead and share a video, 2 minutes with the chairman on 3 things to watch in the markets. He posted that on January 19th. Thank you so much for getting this far.
For the last 6 months, I've been telling you to watch for 3 things. The price of Henry Hub in the United States, the rig count in the United States, and the price of JKM on a global basis, particularly in Asia. Well, Henry Hub is up 60% since June. The rig count is relatively stable, up maybe 10 to 15%. And JKM has gone through the roof, up on an annual basis for the calendar 2021, 3 times. So what you have now is a very obvious arbitrage between American prices and the driftwood value proposition and global prices. You can sell gas for the next 12 months in Europe on average over $6 an MMBTU. You can do the same in Asia for $9 an MMBTU, and the cost to deliver the gas, the variable cost to deliver the gas on the water, is $1.50. What is the value proposition then that Driftwood proposes to its potential partners? The platform is extremely valuable. We can sell 27 million tons of LNG, or 1.5 TCF per year. We can sell it in the United States at Henry Hub and realize an EBITDA on today's pricing of close to $2 billion a year, or choose to sell it in Europe and realize an EBITDA of $5 billion a year, and finally sell it to Asia and realize an EBITDA of $8 billion a year. But what is even more valuable is the optionality. You don't have to sell to one market or the other on a consistent basis. And the markets are extremely volatile. The prices will go up in one place and then up in another place. So you will be able to extract more value of these potential volumes. This kind of optionality is rarely seen, and this is what makes the driftwood value proposition so attractive. On a back of the envelope basis, this platform is worth about $100 billion, and it will cost $25 billion to build. The purpose of Driftwood and the purpose of Tellurian is to keep a maximum amount of value, 40% of the project for ourselves, which should have a value in the $20 to $30 billion on an ongoing basis. So in recent days, you've seen the price of the Tellurian shares start to increase pretty dramatically. And I think the market is starting to recognize that the arbitrage that is currently proposed by the fundamentals is going to be exercised sometime during this year. We are aiming to start construction this summer, and we think the values are going to be extremely attractive. So we feel that the value proposition is finally starting to get reflected, but there's a long way to go. Thank you.
Cautionary information.